Hey everyone, thank you for watching. Welcome to the channel. I am Jessica LaCour, your go-to real estate expert in Northeastern Wyoming and the owner of 411 Properties. Today I am here with my dear friend Laura Tetrault, and she is the owner and producing branch manager of Integrity.
Integrity Edge Lending, powered by Gold Star Mortgage.
Thank you. That's quite the
Yeah,
mouthful.
that's a
It's
mouthful.
a great name. She's here to show us and give us all of her valued opinions on mortgage and information that could be very valuable to you, whether you're a first-time home buyer or just looking to make a purchase and move. That financing is such a critical part of the journey. So she's here to give us and answer all the questions that our buyers have about the process. One of the biggest ones, I think, is about credit scores.
Yeah, for sure.
Can you talk and walk us through the credit score requirements for like FHA, VA, USDA, and even conventional?
Yeah, for sure. So all loan types are going to have varying credit score requirements minimum. When you talk about credit scores and mortgages, let's say you have two applicants or even one, you're always talking about the mid score. So there's three major bureaus: TransUnion, Experian, and Equifax. All mortgage companies are using the mid score,
Okay.
right? And so you've got a high, you've got a low, and you've got a mid. If you have two borrowers, you're using the lowest mid, is how mortgages do it. When you're talking about, let's say, like first time home buyers,
Uh-huh.
most of those loans are going to start at a lowest mid credit score of 620.
Okay.
You do have conventional is also a 620. So when you say conventional, you're talking about Fannie Mae, Freddie Mac. But there are lower requirements out there too. We have locally, we're able to offer USDA loans, which is also known as our rural development loans.
Uh-huh.
Because our community is considered rural in size, rural development loans will actually go down to a 580 credit score.
Oh, that's so fantastic.
Yeah,
So
and
you're
that's
not
kind of
quite
new
at
in our
that
market.
six. And can you remind me what is the perk of the USDA?
USDA is going to be, you don't have to be a first time home buyer. So these can be second time home buyers. And USDA is also going to be 0% down.
Oh, that's huge,
Yeah,
guys.
it's really
No down
huge.
payment. And then if I can
Yeah.
get your closing costs covered, that's like $0 to the table.
Yeah. Yeah.
So good.
On a USDA closing, you really can sometimes even get refunded your earnest money at closing.
Oh,
Yeah.
that's amazing.
Credit scores FHA wise, FHA requires a 560.
Okay.
On a 560 though, you have to come up with a little bit more down payment. It's 10% down. So lowest mid credit score 560 and 10%
I
down.
didn't realize it was that low.
Yeah.
That's amazing.
Yeah. And when you talk about most mortgage companies are going to offer the 580 option.
Right.
The 580 mid credit score on FHA is 3.5% down. Now keep in mind, guys, when you're going down to that 560, not everyone's going to qualify at the 560.
Right.
There has to be, when you have a little bit lower credit score, the mortgage companies are going to look for what we call compensating factors. Things like how long have you been at your job, right? Do you have a good job time? Do you have any savings? Things like, are you paying things on time? So all those things are going to come into account when you talk about maybe a little bit lower credit score.
Right.
The other big loan out there, credit score wise, is going to be VA.
Mhm.
And VA, you can go down to a 580 as well.
Oh,
And
cool.
VA, of course, guys, is our veterans loans. So these are for anybody in active duty military or dishonorably charged military that we're able to do VA loans for.
Dishonorably charged?
Sorry, audit. Did I say dishonorably?
Yeah.
Let me
You're
say
gonna have
that
everyone
again.
running in
Yeah.
here.
Let me say it
No, that's good. That's good. So you have to be honorably discharged,
again.
right?
You got it.
That
Yeah,
letter.
thank you.
Okay. Gotcha.
So anyways, those are your four, I think those are your four main ones. USDA is a 580, FHA being a 560 to 580, depending on how much you want to put down, conventional being a 620, first time homebuyer being a 620, and USDA being a 580. Is that
Awesome.
helpful?
That's so helpful.
Yeah, good.
Very good. So we have a lot of manufactured homes around here, and I
Ton.
would say that's probably the majority of the houses.
Yeah.
Can you tell me what are some of the key requirements people need to know when financing a manufactured home, and what's different compared to stick built or a townhome?
Yeah. So manufactured homes, the government basically started regulating the build of how those were pre-manufactured off-site in 1976. Prior to that, they didn't have federal government regulations on how those were built. So
They could just,
right,
however,
correct.
pilgrim style.
Correct. There wasn't like a uniform code that they were built to. So
Gotcha.
most loan requirements are going to be 1976 or newer if it's a manufactured home. Single wide, double wide, triple wide, we see them all.
Mhm.
Those are going to vary based on your loan programs, but we do have loan programs for all of them, whether it's single, double, or triple wide.
That's a big deal you do single wides because usually that it's pretty tough to
Yeah.
finance them.
Even the first time homebuyer loan product can do a single wide.
That's so cool.
When you're talking manufactured homes, you're most of the time needing it to be original location as well, meaning it was built on site at the manufacturer and it's been moved once to the new property address,
Right.
right? VA is the exception to that rule. So with VA, they are going to allow you to have a non-original manufactured home, meaning it was built on the site, it was moved to site A, it can be moved to site B and still be financeable VA. Most other loan products are going to say it has to be in its original location, meaning the builder built it on site and it was delivered to spot A. So that's a big one on manufactured
Yeah.
homes. Now, I will say in our area, you guys do a great job at listing that accurately, and the courthouse and the courthouse can help us determine is it in its original location.
Right. Right.
Other
Yeah.
thing about manufactured homes, so it's 1976 or newer, single, double, or triple wide, original location is going to be permanent foundation.
Right.
It has to be
Can't
permanently
be
affixed.
stacked on those blocks.
Right.
It needs to be in the ground.
And
Part
we're
of
going to
it.
get an engineer, and a lot of their homes have an existing, what we call an engineer certificate.
Yes.
It's an engineer that comes out and basically states this meets government guidelines, HUD
Right.
guidelines, that it is permanently affixed to the foundation. It
Yeah.
ain't going nowhere.
You can't put the wheels on it and drive off.
So manufactured homes can be complicated, but I will say you're well
They're
versed in them. You're not showing them if they can't qualify for
right.
it.
No.
You know the qualifications of it. So there's definitely a lot of loan options out there for manufactured
Right.
homes.
And that you can get a little bit more bang for your buck with manufactured homes here, I feel like, because
Yeah.
you get the land, a little bit of square footage, and maybe a little bit better of a layout and kind of a nicer house
Sure.
than buying a stick build, I think.
It's a great option for a lot of people in our community, and we have a ton of
Huge.
them.
Yeah, I know. It's a big part of our population. A lot of buyers, especially first time home buyers, are looking for help with their down payment. What down payment assistant programs are available and typically who qualifies?
Yeah, so I would say the most commonly used down payment assistance program for first-time homebuyers is known as WCDA. So almost every state has their own state-funded program where the state is trying to spur economic growth, so they help their first-time homebuyers. Ours is known as WCDA, and they have a great website if you wanted to just Google it. It stands for Wyoming Community Development Authority.
Yep.
So WCDA is your most common first-time homebuyer product in our area. General requirements are going to be 1,500 out of pocket. So not zero. It's not zero. WCDA says, hey, I want to have you have a little bit of skin in the game,
Yeah,
right?
that makes sense.
But it's not 3.5% down either.
Right.
It's usually 1,500. Now, the cool thing about the 1,500 is that it can come from a varying amount of things, meaning like if you, in your contract, Jessica writes it up and you need $500 in earnest money to hold the house, that counts towards your 1,500.
So you'd only have to bring 1,000 to the closing table.
Correct. If you do a home inspection that costs $300 to $400, that counts towards your 1,500. There is online home buyer education required with it. It's all online. $75 is what that costs, and that counts towards your 1,500.
So good.
Yeah, so it's not 1,500 plus home buyer education, plus inspections, plus earnest money. It's all together.
Right. And if you've been planning and this is your first home purchase, you're probably going to have that amount of money saved up anyways, which is good.
Most people I talk to can totally make the 1,500.
Yeah.
Right.
Yeah.
So it's not zero, but it's 1,500. They do require a 620 minimum credit score.
I was just going to ask that.
Yeah.
Perfect.
And how that works is they basically say it's an FHA loan most of the time. It can be paired with a couple different loan products, but let's just use the most common example being FHA. FHA says 3.5% down. WCDA comes in and says, hey, we'll help you with that down payment with the second mortgage up to 15,000. It can also cover closing costs. So this 15,000 over here can be closing costs and down payment, and it's at 0%.
That's pretty amazing. That's like free money.
0%.
Yeah.
It is repayable. So when you sell a house, if you
just remind me when you go to list it.
There you go.
We make sure we put that on there.
You sell the house,
Yeah.
you refinance, or if you live in that house for all 30 years, at the end of year 30, you have to repay it. But again, guys, remember it's never accrued a penny of interest.
Yeah, that's so good.
Yeah. So that's probably
Can't
our
beat it.
most common one for first-time home buyers. Now, down payment assistance, we have probably 2 or 3 others. You don't have to be a first-time home buyer.
Tell me about this new one.
Yeah. Gold Star Select is our new one. And the nice thing about this new one, where we're kind of finding it's a good niche in our market, is WCDA, USDA, most of those are income limited.
Right.
Meaning, even if you're a first-time home buyer, if you make over the income limit, you can't use these funds. And they all have different income limits for different family sizes, but let's say it's anywhere from like 108,000 to 124 on some products, 150 on others. So let's just say you've got a family household and they've got two incomes and they're at 160, 170,000. They don't have the down payment. This new loan program, basically you don't have to have an income. I'm saying that really.
There's no ceiling to what your income is.
Yeah, there's no income limit at all. The minimum credit score drops from 620 to 600, and there's no income limit.
So 600 credit score, what will it pay all of my down payment?
Yeah, it'll pay all of your down payment. It will not pay closing costs. So this one is
That's where I can
closing.
negotiate
Yeah, exactly.
that. Yeah.
And we do a really good job of letting borrowers know, hey, this will pay this. If we don't have the funds, we need to be asking for a seller credit,
Yeah.
communicating that with
Yeah.
the realtors. So there's no miscommunication.
Yeah. It's super important and helpful to you as a buyer to have your lender and your real estate agent work together and
Yeah.
know how to communicate, because it can really buy you a lot.
Yeah, for sure.
Yeah. Especially in this free down payment stuff. Like,
Yeah.
can't beat that.
Yep, absolutely.
Yeah. All right. The next question.
I'm ready.
I have another one I'm going to add on too. I
Okay.
just thought of it.
Good.
Many buyers are nervous about their credit being checked when they start the home buying process. Can you explain the difference between a soft inquiry and a hard inquiry and how that impacts a buyer's credit score?
Yeah. So we started doing soft inquiries almost 2 years ago. And I think it's so important that we offer this service in our community. A soft inquiry, guys, is going to allow us to look at all three of your credit scores. They're going to be identical to what we see on a hard inquiry. Soft inquiry also allows us to see every trade loan on your report. You don't even see the difference. If you put both of the soft inquiry and hard inquiry beside each other, they look identical. So
Do
we're
they?
not missing any information.
Yeah.
But it does not ding your credit.
That's
It
so
doesn't
good.
notify any other creditors that you're applying. It's almost like when you go and get an auto loan and they do all those hard inquiries, it shows up.
Oh, yeah.
This
And
isn't
they're
even
on
gonna
there for
show up.
years.
This doesn't even
So
show
it's like
up
when
as
I
an
go get a
inquiry.
cell phone and they
It's
I
exactly
never
like
know
that.
what happens, but they do a
Yes.
credit check.
Yep. And we still require written authorization. So you'll never not know what happens. It
Right.
requires the authorization. Guys, it allows us to run every option for you. It allows us to
So good.
to see what do you qualify for, to see, do you like the payment? Are you okay with the interest rate? Do you have the down payment? It allows us to work through all the kinks of the loan before
Right.
we ever move forward with the hard inquiry. When you go to contract, you have to have a hard inquiry.
Yeah.
If you know for sure at that point, I'm qualified, I like the payment, I know the house, everything's in place before. Whereas it used to be like, we'll apply and we've got to ding your credit and we hope we have a product for you.
Right.
We just do it a different way now where it just feels so much safer and borrowers are so much more comfortable with that.
It's literally working smarter, not harder.
Totally.
Like, you're going to know everything up in front before you even go look at homes. And then when you find the one you love, you're going to be able to offer with confidence and be competitive on it if there's multiple offers. And it's a really good way for you as a buyer to have all your information and know exactly what you're doing.
Here's another reason I love soft inquiries is in our market, as you know, inventory is tough right now.
Oh gosh, especially in those entry level price points.
Yeah.
It's so bad.
There's a lot of borrowers or buyers that are searching for more than a couple of months.
Yeah.
So with the soft inquiry, if we need to, let's say it's been 3 months, they last for 4 months, but let's just say it's been 4 months, you haven't found the right property. We can do another soft inquiry. So it's not like we're having to ding credit over and over when you haven't found anything.
Right.
I love that too. You can update this without ever dinging credit too if you're not finding the right thing right away.
That's so good.
Yeah. It's a huge plus for borrowers right now.
The day of just looking at homes and not getting pre-qualified and you're going to look around and see what you like and then go get qualified, that is like not even a thing anymore. If you go and just apply and get your soft inquiry, it doesn't even hurt you. And you can look around with knowledge and you'll know what kind of loan type you're going to use if you need to save any money. Like, it's just the way to do it now.
Well, I think this kind of goes into your next question too, is with the soft inquiry, we have a lot of people that are like, I don't know if my scores are going to qualify. Is that what we're going to talk about next? Am I going to qualify? What do my scores look like? I haven't checked them in forever. Credit Karma says they're this.
Yeah.
This soft inquiry allows us to answer all of those questions with confidence. And if we're not there, because we do have borrowers that apply and we're not there yet, credit score wise.
Everybody has a different situation.
Yeah.
There's so much that could be part of that.
We can now know that without dinging credit. So let's say your credit score is not where it needs to be. The last thing you want is another ding. if
Yeah.
it's not where it needs to be.
Just
So
dropped another 30 points.
so the soft inquiry will allow us to look at the credit report, give some advice. Hey, buyer, I would do A, B, C, and let's recheck in 30 days, 60 days, 90 days, whatever that looks like for your scenario. And we're not dinging credit to find out that information.
Right.
That's huge.
It is huge. So let me ask you this then. If someone's credit score isn't quite where it needs to be, what steps can they take to improve it? And how do you work with buyers to help them get loan ready?
Yeah, we have a rescore tool, meaning like our system will look at your credit and it'll tell me immediately how many points can you get in the next 30 days? Is it 30? Is it 5? Is it 0? Is it 100? I mean, I've seen it be up to 150 points that are eligible. So the system basically does all the work for us and telling us exactly how to increase your credit. Sometimes the answer is time, right?
Mhm.
Most of the time, I would say the top thing that we get from the credit bureaus is paying down of credit cards.
Uh-huh.
And so the biggest thing is, especially if you have a small limit, let's say a $300 or $500 credit card, you've got $200 on it. It's just reading that your limit is too high. The credit bureaus, especially if you're wanting to build credit for someone with an extensive credit history, this probably isn't true, but for most of our like first time home buyers
Yeah.
coming into the market,
Most people don't have any credit right now.
right,
Yeah.
right. If that's where you're at with it, those credit bureaus, they want to see that you have a credit card. That's 30% of your score is revolving credit. If you don't have a credit card, you're missing out on 30% of your score alone.
If you don't have one, go get one. Put
If you
$30
do,
on it.
right, if you do have a credit card, what you're wanting to do is make sure you keep that balance. I always say less than 15% of the available balance at all times. Don't go to Walmart and charge it up 100% and go pay it down, because with your luck, you don't know what day the creditors are reporting.
True.
So if it gets reported maxed out for the next 30 days, you've tanked your score. So credit is important, but
There's a
it's also
method.
it's equally as important to keep that balance so super low.
Yeah.
Right? I
Yeah.
mean, that's probably the number one thing we see on rescores is just making sure those credit cards are paid down.
Okay.
Yeah.
So keep those cards paid down. I have everybody always asking or saying, my Credit Karma says this. Like, what do you recommend for a source for people to go to kind of track their credit, or what is Credit Karma it?
I don't mind Credit Karma because it gives you two of the bureaus and the scores are never accurate. I will say they don't match. I shouldn't say they're not accurate. They don't match what you're going to find in a mortgage pool. They're either going to be higher or
Yeah.
lower, and I
Because
don't
I
know.
always have people that are like, that's not it.
Yeah. I will say it's a good tool for finding out what's reporting to your credit,
Mhm.
to making sure what's my balance is a new collection hitting. So I think it's a good resource. It does have a lot of tools.
Kind
out
of
there.
teaches you.
Yeah. Myannualcreditreport.com. I'm going to have to look that up. I think it's myannualcreditreport.com. There are free websites where you can get your FICO, your Beacon, your actual scores. Now, every bureau calculates them different. So every bureau, you're going to have a little bit different credit score based on their calculations.
Gotcha.
Yeah. Again, this is why the soft inquiry comes in important, because you may think you know your credit score because you have
Right.
Credit Karma, and then I pull it and the accounts will likely be the same, but it's a good tool to know what's reporting, but it's not perfect when it comes to reporting your credit score.
Right. So if I'm even thinking of purchasing a home in the next year, I should apply
Absolutely.
and get kind of where I'm
Absolutely.
sitting so I can plan.
I love it when people come in and say, I'm doing this in 6 months. That's perfect.
That's ideal. Yeah.
Because now if I can get you more prepared, if it's a better rate to put you into a down payment program, we can have all those discussions and we're not rushing.
Right.
So really getting prepared, it's the biggest purchase most people make. Get prepared.
Yeah.
Come in, talk to us.
And she's not scary, guys. She's so easy to talk to.
And honestly, if you are scared, because people don't like credit. A lot of people
I
don't.
know.
You can apply online. And so if that's something that's really intimidating, do it online.
Do it
That's okay
online.
too.
She'll email you.
Yeah.
It's like super duper easy. And honestly, you're going to get the best care and the best customer service. There's a reason I'm your partner. Like, I can't express how good of a time you will have as a buyer versus going through like Rocket Mortgage or anything like that. You're going to get a different person every time you call. You will only talk to 2 or 3 people at our team, and they will be there at closing from start to finish. So if you want customer service and a great experience, go see Laura.
Thank you. I appreciate that.
Yeah. So there's some difficult things I kind of wanted to just bring up and see what your thoughts as a lender are. And maybe there's somebody out there that's watching it that is like, yeah, that's me. I'm not quite sure what I should do about it.
Okay.
In our industry, we see a lot of divorces, and sometimes that can be tricky if one party wants to go purchase a house. What are your recommendations as a lender for somebody that is going through a divorce or has just gone through a divorce?
If everything's just being filed, it can get tricky
Yeah,
for the lender because nothing's decided by the court yet,
right.
right? Um, do I still have conversations with a lot of people up front? Like, okay, well, if this, then this. If you split the equity and sell, then this. I mean, can we do all those scenarios?
Yeah, we both do.
Absolutely. I
Yeah,
did that last week, right? I mean,
yeah,
if you don't know if you want to refinance the house and try and keep it, if you don't know if you want to sell and split the proceeds, and what does that look like on a new purchase? Those are all questions we can answer on that soft inquiry too. So
hmm,
you can go back and know how you want to proceed in your divorce, even and asking for the house and
that's
keeping it,
so good.
anything like that.
That's
Um,
super
so
good.
we deal with that a lot. Refinancing. Do we get a lot of refinances because you have to
I'm
take
sure.
one person off the mortgage? Keep in mind, if someone is on the mortgage, it is, even if the court has ordered the house to be yours, it's not going to stop reporting to your credit.
Good point.
Right.
I see that quite a bit where they think just the divorce
Yeah.
decree will handle it, and it's
Right.
not the case.
Right. You still have to qualify. You
Yeah,
have to requalify to refinance that house. So before, again, that you get assigned that debt, it's not a bad idea to call and run those numbers and make sure that's doable for you.
right,
I think that's just super smart going into it.
right,
So it's not a surprise later.
right.
Now we deal with that all the time,
We
and
do.
it's something that's hard, that a lot of people go through, but we're here to help, and it's obviously very discreet and confidential and all of
Always.
that always.
Yeah,
So let us know if we can be a resource in that aspect
yeah.
for sure.
Honestly, we've both been through it ourselves. And
Great.
when we have somebody come to us for advice, we try to really help them and take it personal. So, yeah, no judgment here.
No, no.
All right. So there's another type of buyer that comes to me all the time. And I think it's best if they hear it from you that what are the terms on if they've gone bankrupt? I know there's a couple different kinds, excuse me, and foreclosure. Can they buy again? And what are the time limits on all of that?
So what you're asking about is what the lender calls seasoning requirements.
Yes.
And there are seasoning requirements for your secondary market loans, conventional USDA, VA, FHA. They're all going to have a little bit different requirements. In general, most of the time, there are loan products as soon as 2 years post bankruptcy
Oh,
discharge, right?
wow.
That's a chapter 7, and chapter 7 typically eliminates debt. Chapter 13 is a repayment plan on
That's not
bankruptcy,
the
essentially.
super harsh one, right?
Right. So
Okay.
you've set up a repayment plan on chapter 13. Chapter 13 just says you have to be 1 year into your repayment plan, paying as agreed. The caveat to that is you also have to have the judge's permission. I've done a
Oh,
couple of them because, again, it
I've
kind of
done them
makes
with you.
sense.
Yeah.
Yeah, it can
Yep.
make sense. Most people that I'm seeing, if you're filing bankruptcy as a chapter 7, that is usually a 2 year wait. Some require 3, conventional being the most harsh on that, and they're requiring 4. There are extenuating circumstances. They
Uh-huh.
do allow for that. It's rare, guys. Extenuating circumstances. The couple that I've seen and gotten approved is like, I had a child who got very sick, right?
Yeah.
And we had to file bankruptcy because we couldn't work, or whatever the case was. It's resolved now. Those are things that they are going to look at on a case by case basis. So just know there are extenuating circumstances that can shorten those.
You're good about stuff like that because I can think
Yeah.
of a lot of different extenuating
Yeah,
circumstances that
even
we've
job
had.
loss. I've
Yeah.
done, someone got laid off and we could prove it, right? We have to be able to prove it. And they weren't able to make their payments. They had to file bankruptcy. They got another job salary. They've been back for a year. And so we were able to do it sooner than
That's
the
so
seasoning requirement would have required. We actually have, I haven't told you about this yet.
Oh,
Surprise. We
okay.
have
We're both hearing it at the same time.
we have a new brokered product, and it's called Second Chance loans. It's not a secondary market loan, guys. This is a brokered product. So when you say brokered, you're talking like outside of the box, right? This is an outside of the box solution. There is a product we have that's 1 day post bankruptcy filing. So not sorry,
What?
discharge. Yeah. And post foreclosure discharge. So it has to be
What?
finalized. You can't be in the midst of it.
Okay.
Here's where that just worked for somebody. They filed a medical bankruptcy. They're not out. They're not seasoned yet to do any type of loan. They sold a house out east, and so they have like 200,000 to put down. It's medical. They kept all their other debts, so their score was still, I think it was a
Pretty great.
640.
Yeah.
Right. They would qualify for this where everyone else, every other loan type is going to say you've got to rent for a couple of years.
Yeah.
Yeah. So, I mean, again, there's always going to be a unique circumstance. So, talk to us about it.
So again, yeah, just go
Yeah.
apply and see where you are at because you never know. You
Even
could
just
be
a phone call.
fresh out of a foreclosure. That's amazing.
Mhm.
That's
Yeah.
so good.
Foreclosure timeframes are usually a little bit longer, not with the outside of the box brokered product, but when you talk foreclosure, you're usually conventional makes you wait 7 years. You're usually a minimum of 3 years out on a foreclosure.
Okay.
Again, there is
But
the
at least
second
it's
chance
not never.
program. It's not never.
Yeah.
No. Oh, it's for sure not never.
Yeah. I have a lot of people that are moving here and relocating from different areas
Yeah.
of the country. And the biggest question I get is, do I have to be at my job for a year?
Not necessarily.
I tell them that,
We
but like, what is it? Is it 30
Yeah.
days? What's the like industry thing? Give
Yeah.
us the whole scoop.
There's a lot of people that won't apply because they haven't been at their job for 2 years. I'm
Oh
like,
my gosh. You could buy
what?
after like what, 30 days?
Yeah, you can actually close on a new home loan on a job offer letter.
Oh, that's
Yeah,
right.
and differing loan programs are going to be more lenient or more strict, but like in general speaking, guys, you've got someone moving here. We're actually working with a client right now that's moving from Maine. They both have job offers here.
Yep.
The contingency is two things you have to think about. You have to have started your job before your first payment. So to give you some dates, let's say you close in the middle of March,
Mm-hmm.
your first payment's going to be May 1st. You have to have started your job.
Mm-hmm.
You have to prove that you're going to start before that first payment is due. Most people are if
Yeah.
they're moving here.
Yeah.
The other thing is those job offer letters can't be contingent, meaning
Right.
like, oh, I still have to pass a drug test or a background test. You cannot close that loan until the employer has said you can start with a contingent offer, but they have to email, somehow communicate with the lender saying every contingency's been met, because as the lender, we can't take the risk that one of those wouldn't
Right.
happen and that you wouldn't start your job. So
Right.
non-contingent, or it has to be able to remove the employment contingencies prior to closing. And then most of the time, there are longer time frames, guys, but most of the time you have to have started your job prior to that first payment being due.
That's perfect.
Yeah. And
So you can really accommodate moving here and closing on a house, no problem.
we do it all the time.
Yeah.
And it depends on your pay, right? If you're not guaranteed any certain hours or any certain structure, let's say it's fully commissioned, that's going to be tough because we don't know what your income's going to be. If you have a job offer letter that says I'm going to make $30 an hour, 40 hours a week, that's not tough. We know what your income's going to be. So again, it depends on how your employer's going to write that. We have these questions all the time though, and we can be very specific in asking the employer, like, here is what we need. So we know you're not going to make an offer until you absolutely know you can get what you need from the employer. 90% of the time we can.
Yeah.
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 So we do that all the time.
That's so simple. Again, just apply.
Yeah, absolutely. Find out your options.
Yes. So if I'm buying a house, this sounds really stupid, but do I have to be there for closing? We get this question all the time.
We get this question, or we're surprised because
People
someone
don't show up.
is out of town. In Wyoming, we can do e-hybrid. So that means you can e-sign some of your closing docs, but some of them have to be signed, wet sign is what we call it, in front of a notary. So yes, you do.
Yeah.
If you are not going to be at closing, you need to communicate that way ahead of time.
Yes.
There's ways you can do it. You can give a power of attorney to someone to sign for you. There's a lot of different options.
But it's things we have to set up ahead of time.
Yeah.
So yeah, let your lender or myself know.
And you do have to maybe take an hour off of work or a lunch break.
Sorry. Such a funny thing to me because like it's such a big deal to buy a house. So most people would want to be there, but some people are just very carefree. It's going to close itself.
We need to be more carefree.
Yeah. Yes. Another question I get from couples is, can my wife be on the loan or vice versa? Or when they apply, they're like, do I fill it out for both people? Give me the scoop on that. And does it have to be a spouse? Could you buy a house with your mom?
Great question. I always tell people put your spouse on there if you're thinking about it. If you're like, I don't know if I should, give me all the info up front because it's only a soft inquiry, right? Tell me everything.
You're going to
Because
tell them all the avenues they can take, right?
and if I don't know that wife works outside of the home and you didn't put her on there, maybe you're over an income limit.
Right.
Even if she's not on it, that's how they might calculate it on that particular program. So I'm always begging people, like, just tell me everything, give me all the info.
Give
And
her
then
the
if,
scoop.
yeah, if it makes more sense, we do this all the time.
Yeah.
Like, hey, let's take you off or let's put you primary or whatever that looks like. We're going to structure that to make sense for you guys.
Yes.
But give your lender all the info up front. They have to know everything.
The more, the better.
Yeah, to make the best loan
Oh.
program decisions for you.
Don't try to lie about things because we'll find out.
We will
You find out.
We will find out. We'll find
What
out.
are some things people lie about?
Oh my gosh, are we going there?
Yes, we're going there.
What do people lie about? How much money they have, how much money they make. I don't know. Here's my caveat. I don't know if people lie or they just don't know the accurate numbers, which
That
is
could
why
be.
we're
That could be
always
that they
asking
don't.
for like pay stubs, right? Like give me a pay stub because how you calculate it might not be
Right.
how the lender's calculating.
Maybe
And I've
they're
seen both
saying
ways.
gross and you're talking net.
Totally.
You know, like
Or they tell me net and they're making way more than that and they're over an income limit. So how we calculate income, I'm not going to say they lied about it. I'm going to say they maybe don't understand how the lender's looking at the income.
yes.
And so if your lender's asking for pay stubs, it's not because they're super snoopy. They genuinely like need to know those numbers.
They really don't care.
They really don't care. Same thing with bank statements. They're like the bane of our existence to ask for them.
Yes.
But especially on like these first time homebuyer or income limited loans, guys, we're looking at your deposits because we're making sure there's no other income sources in that household that might throw you over the income limit.
Yeah.
And WCDA is going to require copies of those as well. So
Yep.
we're just doing our due diligence up front.
Mhm.
Is it a lot of paperwork sometimes? Yeah, but will you have the most solid approval where you can go and know you're confidently shopping for a home?
Yeah.
You're going to be approved for this loan every freaking time.
What I
Absolutely.
love about it is we're not like 2 weeks in and then we get a call that underwriting found something
Right.
and all of a sudden you can't buy the house. So
Right.
not only are you heartbroken, your kids are, we all are because we all just worked for free. Like it's terrible for everybody. So the way you do it where you get everything up front and having people tell you everything is a great way to just avoid any catastrophe.
Yeah. Yeah. And it does feel invasive. I hear that a lot. People are
Yes.
like, you
Where
really
people-
need that? I'm always like, we need your blood sample and your firstborn child is what a mortgage sometimes
Yes.
and we'll be as professional as we can asking for those documents. But yeah, we've got to have everything to make sure that there's no part of this mortgage that we're doing
Right.
incorrectly.
Right.
For you. Yeah.
Yeah.
Yeah. You're speaking of, we went from can your wife be on a mortgage to
Oh yeah.
are buyers liars?
Buyers are liars.
Yes.
Sellers can be too, though. You just don't see that.
You can put spouses. So let's say you apply and I'm like, hey, it doesn't make sense for spouse A to be on the mortgage credit wise or income wise or whatever that looks like. They can still be on title, so they can still be homeowners, right?
Right.
I have a lot of people that I'll go back to and be like, hey, your credit's perfect, but we need more income, right? What does that look like? So they might add mom, dad, grandpa, whoever as a non-occupying co-borrower. So someone that's borrowing on the house with them, not going to occupy the house.
So good.
Super common.
Yeah. I see that way more the last few years just because housing has become more expensive.
Yeah.
And people are relocating as a family. And
Sure.
so, yeah, I see a lot of maybe mom and dad and a child or a grandpa and then, just a
We'll
whole mix
structure
of
it
people.
however we need
Yeah.
it. Yeah.
Yeah.
Whatever makes more sense for sure.
Yeah. Can you buy a house with a girlfriend or a boyfriend?
Absolutely. Yeah.
Perfect.
Yeah, you
Yeah.
can.
I
There's plenty of unmarried couples that apply together and are approved. That's not a problem.
It's so funny how people have this misconception of like they have to have 20% down, they have to be married, all sorts of like I think it was probably old school things
Yeah,
to
maybe.
buy a house.
Back
Was
in
it
the
ever a
day.
thing where you had to be married to buy
I
a
don't-
house?
Not since I've been doing mortgages in 12 years, but I mean, at one point probably.
Maybe it was.
Yeah.
Yeah.
I think I just read that women weren't able to be on checking accounts until like the 60s or
Yes.
something.
Yeah.
I don't even know if that's true, but I saw it and I was like,
Can you imagine?
well, no, my husband wouldn't know where to pay the bills.
No. Mine would be like, oh my gosh, that's what makeup costs.
Seriously.
You would not be okay with it.
So yes, you don't have to be married. You can Almost anyone can be on a mortgage together. I've even had friends buy a house together. I'm not saying that that's the best structure. That's not what I'm saying. I'm saying you can.
What are some other things that people should not be afraid about telling you that we've had people lie about?
One thing now that we're in IRS season, tax filing season, one of the reasons we do get bank statements up front, or what we'll find, is IRS tax payment plans.
Oh,
That's a
yeah.
big one because it's
That
hard to
is.
report to credit. Any of those
You
things
don't,
that aren't reporting to credit.
right. You probably don't think about it if you have a
Right.
payment.
And so we're sending an email up front, like here, and we'll snip. Here's exactly what showed up on your shop inquiry. And we'll state in there, are we missing any debts? If there's monthly payments, we're not talking about utilities and cell phone. We're talking about IRS.
Child support?
Sure, child support. Yes, disclose all of that because those are things that are going to be found later that will hinder your ability to buy or change the purchase price range you're in.
Okay.
So just flood us with information. I promise.
Even if you're past due on child support, tell her.
Totally.
Tell her
Totally. 'Cause
everything.
there's ways we can
Yeah.
get caught up and still make that
Oh,
work.
yeah. We have ways around, I want to say pretty much everything, but you're good about being creative. And we have a lot of years of doing this at a high level. So there really isn't anything that we haven't seen.
The more info we have, the better your approval is. So tell us everything.
Yeah.
Even if you don't think it applies, if we need to know, we'll tell you. And if we don't, we'll just save it in our little folder for future reference. And that's
Yeah.
okay too.
Absolutely. Do those IRS payments show up on a credit report?
No.
They don't.
No.
Okay. So that is important.
It is important because a lot of times we'll see it coming out of a bank statement later and we're like, oh
Oh.
shoot. Any tax liens like that you have that you're paying towards, self-employed borrowers, they're going to make sure, because not all loan programs are going to require your full tax return. If you're self-employed, they typically are. They're going to see you had a liability last year and we're going to ask for proof of how you paid it. And if it's on a payment plan, that's totally fine.
Oh,
There's
gosh.
plenty of IRS payment plans.
Yeah.
We just need to know, what does that look like? What's the monthly payment?
Yeah.
How many? Some of the loans even go into detail on IRS payment plans that say you have to have X many months of regularly scheduled payments. You can't prepay. So it could change your closing date
Right.
or the ability to close at a certain time.
What was I gonna say? There's another thing that, oh, so say you got behind on your mortgage payments a few times. I've had people do that and then they forget to tell you or something. How does that affect?
So typically we're going to see that on the credit report. However, I think what you're talking about is like we did maybe a soft inquiry or maybe we did the hard inquiry. We have a longer closing, so we didn't see it.
Yes.
Right? Because your
Yes.
credit reports are good for 4 months. So let's say I pull credit, I don't see your past due on anything. You're mortgage shopping or you're home shopping, excuse me. And in the meantime, you've gone past due on stuff. We require 10 days prior to closing an update to credit. It's nothing you'll ever see. It's a soft, right? It's just going to say, did anything go past due? Did you open up any new accounts?
Yeah.
So we're going to know within 10 days of closing, every loan is going to require you update credit to make sure you didn't take on any new debt. You didn't go past due on anything. And that really can harm your approval when you're a week out of closing and we pull that report and it shows that now you didn't make a mortgage payment. Your whole loan is maybe not going through at that point, depending on the reason or what it did to your
Right.
credit score. So
Right.
maintaining the same credit status and payments through the approval is huge.
Right.
Don't make any big purchases, right? Don't let
No,
anything
do
go
not go
past
buy
due.
that car right before closing. 'Cause
Right.
we may have a problem.
Yeah. Same thing
You
with
may
your
be-
job. Even 10 days prior to closing,
Yeah.
we'll have to verify, are you at the same employer? Okay, well, it's just a quick call. We can do that pretty easy. A lot of it's online anymore. But if your employer's like, yeah, they're here, but they did give their 2-week notice, that's a problem.
Right. Because
Right?
you have no way of knowing their ability to repay.
Exactly.
And
Right.
that's what you need to know.
So just no big changes, right?
Right.
And does life happen? Yeah. And did I get a call the other day that said, I just got another job offer. I know I'm pre-approved. We could work around it as long as
Yeah.
I knew.
Just
it
let
was-
her know.
Then it's not a scary situation. It's not last minute. We made sure before you ever accepted that new offer that it all worked. And so don't be afraid to, but I would just say communicate all of that with your lender
Right.
because even as close to 10 days to closing, we're finding out new stuff all the time.
Right.
We don't like surprises.
No surprises. Even when I've purchased homes through you, I make sure I'm like, hey, can I move this money or can I go buy
We
this?
terrify people.
Oh, we do. You guys scare me. Can I please use my credit card at the grocery store?
Shop at Home Depot again. I know. And then yeah, once you sign that dotted line, you guys, I get this a lot too. People will come to me at year end and be like, I didn't make too much money.
Really?
Once you sign the dotted line, we will not check your bank accounts after that. We will not.
Laura is not
You
pulling
can switch
everything up on you.
jobs. You can make more money. There it stops once you close. Everything has to be super accurate as of closing. But
Yeah.
just know it's not this ongoing check.
After you close, you can go buy that new car.
We will
You
leave
can
you alone.
go finance the furniture, anything you want. Everybody's so scared. And I think one of the big goals I want to get across to them is that you're not scary. The loan application process is not scary. In fact, it is so easy. I've done it a million times through her. You just go in, click, and it takes not even 5 minutes. If you don't know the answer to something, leave it blank and just proceed because you'll ask them.
Yep.
But yeah, it's such an easy process, and to get pre-qualified is a must now. And no agent's really going to show you unless you are pre-qualified, because you could be letting yourself down in so many different ways. You could be looking for something that's not attainable for you, or is completely not even in the right loan type for what you're eligible for. So you only have things to benefit by getting pre-qualified. And why not take advantage of one of these incredible programs
Right.
that can give you free money, a free loan on your down payment? Oh, so many good things.
I promise it's not as intimidating as you think. The application asks for your personal info, date of birth, social security, address, name. It's going to ask you about work history. It's going to ask you, do you own any other property? Do you have any child support? It's super, super basic, guys.
It is.
And then we'll follow up with a phone call or an email, whoever you prefer to be communicated with. But there's no reason not to know your options when it comes to home loans.
No.
It just isn't. And when people are intimidated, I'm like, then they do the process and they're so relieved. Even if it's a no, not now, here's how you do it. They love that they have that answer versus I have no idea. I literally have no idea if I'm qualified for 100 or 300.
Yeah.
You know?
I have this saying that knowledge is power. And even when you simply get pre-qualified, you feel so much more confident in, like, yes, this is an option for me. These are my limits. This is what I expect. Now, why wouldn't you want to do that?
Yeah.
Like,
And even if I will say, like, let's say your limit isn't where you want to be, cool. I'll tell you how to get there.
yeah.
You get higher, you add a cosigner, you pay off a debt, you do this, that, we raise your credit. I mean, these are all conversations we can have that we have every single day.
Yeah, so good. Thank you so much for giving us all these wonderful answers. It's been such a treat to have you. I'm sure we'll have you again. So make sure you like and subscribe, leave a comment, you can even ask a question for Laura or I. I will make sure to pass those on to her. How can they reach you?
Cell phone, text, or call, guys. Whatever's easiest for you, 307-680-5490. Or email is laura@integrityedgelending.com.
Great. If you guys are thinking about buying a home or refinancing or anything, you can reach out to Laura or myself, and we cannot wait to work with you every step of the way. We'll see you on the next one.
Thanks, guys.